If you are the type of investor who believes that we're going to see in the next couple of years, $4,000, $5,000 gold, you will make an absolute fortune on this. I am not certain that the deposit is economic at all at $2,400 gold. So it's purely an optionality play. For me at my age, you can take away some of my upside if you take away most of my downside. So I'm not buying optionality plays very much anymore. So I'm not one of those who is a short-term trader. I don't care if gold goes from 2450 to 2575. I own gold because I'm afraid in the set of circumstances in front of us over the next 5 years, not hopeful, by the way, afraid that gold goes to $7,000 or $8,000 or $9,000.
RickRule of Rule Investment Media forecasts a significant rise in the price of gold over the long term, with some projections suggesting it could reach between $7,000 and $9,000 per ounce. Recently, central banks have emerged as the primary buyers of gold, overshadowing the purchase of gold stocks. Despite this positive outlook, gold remains trapped in a relatively narrow trading range, struggling to maintain gains above $2,350 an ounce. On the downside, it has consistently supported around $2,300 an ounce. Although gold had a strong start to the week, it is heading into the weekend with a loss. Currently, gold and gold stocks constitute a small fraction of global assets, around 1%, and even less in the U.S., representing less than 0.5%. RickRule notes that if gold prices rose to $4,000 or $5,000, those invested in gold could realize substantial profits. The potential rise in the price of gold is partly due to market expectations of an early interest rate cut. The latest inflation readings have rekindled investor hopes that the Federal Reserve might expedite their planned rate cuts. A cooling labor market and softer retail sales also point to weaker economic activity for the second quarter of 2024. Analysts at ANZ share this optimistic outlook, projecting a price target of $2,500 per ounce by the end of 2024. RickRule also highlights the impressive potential of silver. Historically, silver has experienced significant bull markets. One notable instance saw its spot price multiply more than 38 times over a decade, starting at $1.29 per ounce in 1970 and reaching $50 per ounce by the beginning of 1980. Although silver equities make up a small portion of some investment portfolios, another bull market in silver could lead to substantial returns. Join us as we delve into RickRule's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
I think the gold price goes inexorably higher. By the way, I should tell your audience, I'm not one of those who is a short-term trader. I don't care if gold goes from 2450 to 2575. I own gold because I'm afraid in the set of circumstances in front of us over the next 5 years, not hopeful, by the way, afraid that gold goes to $7,000 or $8,000 or $9,000. I also understand the juxtaposition between the gold price and the gold equities prices. The buyer of gold in the last 4 or 5 years has been central banks. They don't buy stocks. They buy gold. When people look at the juxtaposition, it's that easy to figure out. Until 10 weeks ago, there wasn't Western retail buying of gold. The ETF flows will show you that. The buyer was the central banks, and the central banks don't buy gold stocks. When the momentum becomes established in the material and retail buyers come into the gold space, which they have in the last 10 years, you will see that buying come down into the gold stocks. It's just going to take a little time.
I think you've alluded to this in multiple interviews before, but at this very moment in time, gold and gold stocks make up about 1% of total global assets.
But the number in the U.S. is much more stark because of greater investment opportunity, particularly in technology in the United States. In the United States, it's less than 1/2 of 1%. If you are the type of investor who believes that we're going to see in the next couple of years, $4,000, $5,000 gold, you will make an absolute fortune on this. I am not certain that the deposit is economic at all at $2,400 gold. So it's purely an optionality play. For me at my age, you can take away some of my upside if you take away most of my downside. So I'm not buying optionality plays very much anymore. In my life, I've been a beneficiary of 4 silver bull markets, and they're truly spectacular events. At age 71, I'd like to experience just one more. Silver equities represents about 2.5% of my speculative portfolio, so a fairly small proportion of my net worth. If we experience a silver bull market, I expect that 2.5% of my portfolio to become 25% of my portfolio. So I own my silver portfolio, at least the speculative part of my portfolio, purely with the part of my brain that's focused on greed. High risk, high reward. Let me give you a couple statistical examples. In the decade of the 1970s, before I was wealthy enough to buy a lot of stuff or smart enough to identify what to buy, I watched Coeur d'Alene mines, the Coeur that you just referred to earlier, then called Coeur d'Alene, go from 10 cents to $65 in 10 years. That sort of caught my attention, you know. I didn't own it, sadly, so it was only of academic interest. Fast forwarding to the end of the decade of the 80s, the beginning of the decade of the 90s, I underwrote two silver mining companies, one Silver Standard at 72 cents with a full warrant. 6 years later, it was a $45 stock. I also underwrote Pan American Silver for Ross Beatty at 50 cents, and it too went to $40. When the generalist money gets attracted to the precious metals sector, precious metals bull markets are always led by gold. But when the generalist money gets attracted to the narrative and they start to come into the silver space, there is not enough market cap among the legitimate silver companies and the silver juniors to hold the money. Doug Casey likens it to trying to siphon Hoover Dam through a garden hose. And truly spectacular things happen to market caps.
Newmont Corporation is trading 6.8% below its 52-week high of $45.92 on July 14, 2023. Over the past 3 months, NM has demonstrated a robust 24.8% gain, contrasting with a marginal decline in the Dow Jones Industrial Average Index over the same period. As a company valued at over $10 billion, Newmont Corporation falls squarely into the category of large-cap companies. This classification underscores its substantial size, stability, and significant influence within the mining sector. Renowned investor RickRule rates Newmont Corporation highly, assigning it a 5, with the potential for an upgrade to 4. This rating reflects Newmont's strong leverage to higher gold prices, a critical factor in its operational and financial outlook. Additionally, the recent acquisition of Newcrest has been positively received, further enhancing Newmont's strategic position in the market. Let's get back to the interview.
I currently have Newmont as a 5. I think they have wonderful leverage to higher gold prices. I think that the acquisition of Newcrest was a good thing. I am reviewing them for upgrade based on their stated policy of selling a bunch of their second-tier mines, which has been a problem for them, operating too many second-tier mines, so that they can at once improve their balance sheet with the proceeds of those sales, and also focus on higher quality tier 1 assets. If they do that, I'm certain that I will upgrade the ranking from 5 to 4. They have extraordinary operating leverage if they clean up their operations. A premium price for a premium product. It was a 4. I upgraded to a 3 when the government of Panama stole Cerro Colorado. That asset, which I believe there will be a recovery on, constituted 14% of their net asset value, and the market's response to the theft of that asset was to destroy 42% of market cap. The simple arithmetic is if you give up 14% and the market takes away 42%, the stock's a bargain. While I would consider this to be a premium priced company, it deserves to be a premium price. The management expense ratio is 11 basis points, the lowest in mining by a country mile. The operating margins are the highest in the industry by a country mile. They have a 30-year culture of the intelligent employment of capital. A premium product. It's difficult for me to understand why anybody would construct a gold portfolio that didn't include Franco-Nevada. Yeah, we have Skeena at a 5. Again, reviewing it for an upgrade to 4. I need to know a little more about how they sell the concentrate with all the penalty material. And I need to know a bit more about the metallurgical process by which they assemble and perhaps beneficiate their concentrate and who and how they sell it to. Certainly a wonderful deposit. And one of the untold stories around Skeena is the very good relationship that they have developed with the Tahltan First Nation, their host. I'm personally aware of that, knowing Jerry Asp, who runs economic development for the band, and knowing a bit Chad Day, the ancestral chief of the Tahltans, both of whom speak well of Skeena.
Triple flag precious metals.
Disclosure, I'm an owner here, like Franco. It's one of the second tier royalty companies, second tier not in terms of management acumen, but rather just in terms of size. Royalty business is a very good business. I'm attracted to it. The Triple Flag people put together their royalty portfolio before royalties became popular. They were really an adjunct of commodities trading. So I'm a holder. I have that as a 4.
And what about Tanzanian Gold Corp?
Tanzanian Gold Corp I have as a 6, possible downgrade to 7. They have attracted a large investment audience because of a former founder and promoter Jim Sinclair, a friend of mine, who has since passed away. I don't like small mines. I don't like mines that have less than sort of $2.5 billion in situ recoverable reserves and resources. My experience has been that everything that can go wrong with a big mine can go wrong with a small mine, but a small mine can never make you big money. So the idea that I take a big risk for a small reward is not attractive to me.
With gold poised for a potential significant rise and Newmont Corporation demonstrating strong leverage to higher gold prices, what strategies should investors adopt to maximize their gains in the precious metals sector? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.